or the POB Sahamati hackathon, where the idea is to kind of deliver and bring out innovation in use cases and customer journey. So the session which I'll take today is about the basics of account aggregator, kind of saying what exactly account aggregator is supposed to do and how is it kind of instrumental in delivering financial inclusion, not just for credit across various use cases, and where are we and how is the system expected to evolve over the next few months or years. So I'll just present my screen and take you through a short kind of summary on how the account aggregator ecosystem is shaping up as we move forward. Just a second. So first of all, we'll start with the problem statement which we are trying to solve as a country today. So as a country, India is sitting at a very unique position where, more than 85-90% of the Indian adult population has a bank account. We have more than 1 billion plus mobile phone subscribers and more than 780 million plus broadband subscriber, which actually means that, large population of the country has an internet connection today. But despite all enablers in place, we still kind of call ourselves underpenetrated in terms of financial services, and the numbers are all visible in the low insurance penetration of 4 to 5%, where the world average is around 8 to 9% in terms of premium to GDP ratio. Similarly, there is a huge unmet credit demand of 20 to 25 lakh crores for the MSME segment, the segment which is called as a backbone of the country. And likewise, on securities and investment opportunities, we have not even scratched the surface, and less than 1% of the population of the country is actually using, trading actively or using investing in mutual funds or doing, availing wealth management services. So where is the problem like? So, we look at the problem in three stacks. So one was the identity stack, the second is the payment stack, and the third is the data stack. So while, India did a commendable job in terms of giving a identity to every individual of the country, and this identity is digital, can be verified digitally. So as a country, we are now in a position where we can verify the identity address of a person using a digital mode. Then we then moved on to saying that let's solve the payments issue. So that has been largely addressed to by UPI, where more than 60% of the Indian retail payments are now being done on UPI. And now we have taken digital payments to a customer of segment which could not even ever imagine doing a transaction through internet banking, or to that extent even mobile banking was not that easy and intuitive. So we've made it like extremely easy for anyone to make payments from one entity to another. So where are we struggling right now? So currently, what one of the biggest bottleneck in any kind of digitization that can happen in financial services at the level of data, because the consumer data, and given that the advent of digitization and the kind of footprints the customer are leaving digitally. Idea is to say that how can any financial service provider access all that data and take informed, intelligent decision and offer real-time services to the customer. So the current data which we have, as a customer, typically any average customer will have one or two bank accounts. He will have one insurance policy. He'll have a pension account. He might also have a demat account. But to be able to access all of this together and present it to a prospective financial provider, let's say a lender, saying that I am a person who can be trusted to give a loan because I have been I've been conducting myself in a disciplined manner, and I do have a good amount of investments of different varieties. So that is what the account aggregator ecosystem is trying to solve. So if we look at this framework, this is a pictorial description of how account aggregator framework looks like. The center of the framework, the focal point is the customer. The idea is to empower the customer on two fronts. One is to say that the customer can now share any data which has to be shared and it's pertaining to the customer. It has to be shared with his or her explicit consent, and this consent is captured in an electronic format, right? And only with his explicit consent, data will flow from his existing financial service providers, which are called the FIPs, the left box which you see in the framework, to the financial information users, which are the prospective financial information providers, financial service providers to the customer. And the second biggest thing which Account Aggregator is trying to do is to make the data portable through a digital channel, where as a customer, I do not need to go and run around to collect my data and share it with a prospective financial service provider. So one, the data can be shared only with my explicit consent. Second, the data can be shared digitally on my instruction from the existing financial service provider, which we call FIPs in Account Aggregator, to a prospective financial service provider, which we call a FIU in Account Aggregator. And the beauty of the system is that everyone operating in this ecosystem is regulated. So the focal point, the account aggregator, which the customer is interesting to operate as their consent manager. One is to record consent, and second, to act as a data pipe for allowing the flow of information from FIP to FIU. The account aggregators are RBI registered NBFCs. They've got a special license for account aggregator, where their only role or business can be managing consent for the customer and enabling data flow. So as a entity sitting in the center as a regulated entities, they're not allowed to do anything else with the data. The data flows through them, and they are data blind entities. On the left side, again, we have all regulated entities from one of the 4 financial sector regulators. So it could be banks, it could be AMCs, it could be DMAT, depositories, it could be insurance. The latest addition to this stack is now the GST returns, which have now been enabled on Account Aggregator in terms of, they've already been notified and technical work is underway. On the user side, again, it could be any entity which is registered and regulated with one of the 4 financial sector regulators, and the kind of use cases for which information is being sought ranges from, credit to insurance to personal finance management, DMAT account opening. So we will get into that detail a little later. The way this framework works is very similar to how UPI works for data. So as a customer, I download an Account Aggregator app. I open a data handle using my mobile number. So that handle is then that mobile number is used to kind of find or discover all my existing financial accounts with different FIPs. Once the accounts are discovered, then I decide as a customer which are the accounts I want to link to this handle which I have created with the Account Aggregator, like I do for any UPI payment. And post that, I decide, whenever I need to share my data and instruct my existing FIP to share the data, I just need to give a consent which will be shown to on my app as a notification. So this is one. Primarily today, the acquisition channel is as a part of embedded journeys in the FIU apps or online journeys, where through a SDK or a web redirection, the customer can do the same 3 steps of opening a handle, discovery, linking, and giving a consent, all in the flow when he's going to apply for a loan or any financial service. So we'll get into the flow also in more detail as we move forward. See, this is a pictorial description of how Account Aggregator at scale may look like. So the FIP base is expected to broaden. Currently, around 1.1 billion Account Aggregator facilities available. So 1.1 billion accounts, the customer can decide bank accounts to share their data through Account Aggregator. But going forward, once GST, telco, EPFO, DigiLockers, pension, all of that, in the medium to long term get onboarded on Account Aggregator, that would actually mean at least 3.2, 3.3 million accounts across different financial sector being able to use Account Aggregator to share their services. to share their data. So how do you see account aggregator? I mean, we need to look at account aggregators as digital foundational infrastructure for the country, because it has immense value both for the individuals on one hand and for the market players on the other hand. For the individual, it gets more security, more control over their data, and also the seamless convenience of sharing their data. And in fact, presenting it to a prospective provider, saying that, this is my data, now you please give me either a good loan or advice or insurance, what should I do? So that actually makes it so much easy for the individuals to use their data and seek advice or the right product based on that data. That in itself is expected to be a big enabler for access to financial services in our country. On the market player side, it has again very unique benefits. One is, given that now the entire process of sharing data is digital, which means that now you do not, as a customer, you do not need to request the customer to either share the PDFs or paper documents, and so for which the customer will say that, I'll do it tomorrow, day after, and it creates a lot of friction, following up with the customer, asking them to share their data. Now, if a customer is educated, on account aggregator, he can just, with a few clicks, share the data from their existing financial accounts. The second biggest advantage has been the fraud rate, because the data is flowing directly from the source FIP. So there is no mechanism by which the data which is flowing from, the existing financial accounts to the users can be tampered with in any manner, either by the customer or any intermediary. So for the lenders or for the, insurers or anyone else who is using their data for risk assessment, the work of, filtering out suspected fraud statements, and then kind of seeing which ones can go through, not go through, has all been reduced significantly. Obviously, lower drop-offs, lower fraud rates, and lower work on risk assessment would also mean lower operating costs, and that would, in fact, in the long run, with higher digitization being possible even at a document data sharing level, it would mean that the financial services provider can now think of offering small ticket products which were earlier unviable because of high cost of processing and credit risk. They may just kind of open up that market, make it more attractive for the financial services provider. And the same goes for other sectors, not just for lending, even insurance, because insurance as a sector also, currently the market is very limited to self-employed. So how do you use, easy, secure, consented data to offer products which are suited for a self-employed customer? Another unique feature which account aggregator has is a recurring consent feature, where, the customer at the time of availing a service can give your permission to fetch his data on a recurring basis, which could be every day, it could be every month or every week. And this data can then be ingested by, the financial service provider to see if there's any risk building up in the customer's portfolio. And if it is building up, do they need to reach out to the customer upfront and kind of counsel him on how to manage his liabilities and all of that. So that is one big area where, we see direct impact happening on the bottom line of the financial service provider by as reflected in lower, let's say non-NPAs or bad debt credit. And finally, as I said, given that now a consolidated view of all financial statements will be available, it could be a point where PFM and wealth management services can take off. So I'll just quickly give an update on where the ecosystem is currently at. So this is the picture which kind of shows that the system is expanding. Today we have, both entities from all four sectors, RBI, RDA, SEBI, PFRDA, already using account aggregator, both as so RBI regulated entities are now operating both as FIP and FIU, with all 12 public sector banks and the large 10 private sector banks onboarded on it. IRD regulated entities, a few of them have already started, providing information as a FIP, and they are anyhow using it. SEBI regulated entities are in the process of becoming FIUPs, but they as a FIU using bank account data for various use cases. And likewise for PFRDA, for retirement advisors, there are a few entities using it. So this is how the performance looks like. So when we say 1.1 billion accounts enabled an account aggregator, which means that this account aggregator facility is available to these customers. And tomorrow, if they want to share their data digitally using an account aggregator interface, they can do so. They are totally enabled now. Out of these 1.1 billion bank accounts which are enabled, around 2.5 million customers have already used it for sharing their data. So given successful consents, and we are seeing healthy growth rates of 50 to 60% month on month. Currently, there are 6 account aggregators, 26 financial information providers, and more than 80 entities which are using account aggregator as FIUs. So we are sitting in a very we are sitting at a point where the account aggregator system may just expand rapidly. The sector is now becoming cross-sectoral. So like I've explained, out of the 94 financial institutions which are live as FIUs, they're using data from bank account data from through via account aggregator. 73 of them are RBI regulated entities which are with a good split of banks and NBFCs. 10 are SEBI regulated entities with a good split of brokerage houses and PFM RIA registered investment advisors. 9 are IRDA regulated entities, which include mostly life insurance companies and broker. And PFRD have already explained. 26 financial institutions are contributing data through account aggregator, which includes 12 public sector banks, 10 private sector banks, 1 small finance bank, and 3 life insurance companies, which actually means 3 life insurance companies are now giving data for existing insurance policies through account aggregator. So here are some of the initial benefits. So we did a survey on, what are the initial kind of use cases that are coming up based on account aggregator and what have been the benefits. So in terms of the cumulative consents fulfilled, which is more than 2 million, we say 75% of the consents have been taken for offering lending services. And the primary use case has been to underwrite a loan, which has been the biggest use case of bank account statement, where the idea is to say that we are using now instead of fetching bank accounts through either a net banking login or a PDF upload, we will now fetch it through account aggregator. There are also, some efforts going on to say that let's not limit the use of account aggregator only to a digital mode. Let's also kind of take it to a phygital mode where any walk-in customer, into a branch, instead of doing the entire journey and applying on for a loan on an app, if he wants to apply it through the, traditional manner, talking to his relationship manager, the only portion where he can use a digital mode could be sharing data using account aggregator mode. So as a customer, I get a QR code to scan. I download an account aggregator app. I open a handle with AA. I link my accounts to AA. Instantly, I give a consent using that data handle to share that data to the bank I've walked in. So it makes, so you as a lender, there is no need to actually say that I can implement it only in 100% instant journey. It could be very well kind of used in semi-digital kind of journeys. We're also kind of working on use cases where it may actually be used for in an assisted mode for customers who avail loans through business correspondents. So how could this account aggregator framework be used by BCs to offer loans to the customers? The second biggest category of use case is from the security sectors, mostly for personal finance management. It has been a big hit where a customer can see his, consolidated bank account statements at one place, and basis that then they can decide, do a detailed spend analysis and decide how much should they invest in which category. And, so that there could be a lot of information-based advisory that could be built up. The second use case in securities market has been demat account opening, which is a mandatory requirement, 6 months bank statement at the time of demat account opening. So that has also been used. And for pension and insurance, it has largely been limited to doing a risk assessment of the customer and offering insurance specifically, for term insurance policy. How do you assess the customer's right premium and sum assured eligibility basis his existing income profile? So it has been used there. we have current till now around 17 billion, which is 1700 crore of loans have been disbursed through Account Aggregator, more than 50% of which has been MSME lending. Early adopters have been, the new age private sector banks, including Axis Bank. They have explicitly reported a 30% growth in disbursements using AA, primarily because the funnel has improved and the conversion rates have gone up. This third point, which again has been reported, is that the fraud rates related to bank statement through AA had been very high, in the range of 0.5 to 4% for all banks. This has become zero. And obviously this is expected to result in low NPA and add up to the bottom line of the banks and financial information users directly. The drop-off rates in operating costs are expected to reduce as the system becomes interoperable, and the technical performance improves, and the scheduled or the planned rollout of Account Aggregator to a larger FIP base. So as and when GSTN comes in and tomorrow CBDT or any other government data EPFO comes in, that is obviously expected to, then we expect the FIUs to look at Account Aggregator as a single channel access to any kind of information. And that in itself could be a big lever to increasing adoption. So I'll just quickly take you through a typical, Account Aggregator journey. How does it look like? I'm sure, people who are participating would have already downloaded a few Account Aggregator apps and gone through the journey. But this is how it looks like. When you get into Account Aggregator SDK or a app, you will be asked to verify your mobile number, which is slide 1. Once the mobile number is verified, you need to, as a customer, select the banks with which you have a bank account. So once you do that, using that bank FIP ID and the mobile number which you had inputted, the Account Aggregator will fetch your existing bank accounts with these banks. So for example, in this case, if I have chosen IndusInd Bank, in slide 3, all my savings accounts with IndusInd banks have been discovered and displayed in front of me. Now, as a customer, I can decide which bank accounts I want to link to the handle I have created, the Account Aggregator handle, which is typically your phone number at the rate of, the Account Aggregator. So in this case, if it's Finview, phone number at the rate of finview.com. And then once, as a customer, I decide, and once I choose the accounts I want to link, I say proceed. Then I'll get a OTP from every FIP for whom I'm linking my accounts to the AA handle, a OTP for verification. So in this case, I've got a OTP from IndusInd Bank, which I need to verify. So this first 4 steps, the slides which have been shown on the screen are basically a one-time step for any customer. So as a customer, I just need to open a AA handle and link my accounts only once and be done with it. Then comes the consent step, which could be regular, recurring, and wherever I need to share my data, I just need to kind of share my handle with the FIU. They will raise a consent request on the Account Aggregator, which will be displayed to me on my screen. And I just need to, as a customer, decide, approve or deny that consent request. If I approve it, data will immediately start flowing from, in this case, IndusInd Bank to the FIU with whom I have gone to take a loan or any financial service. So this is how the journey looks like. This is the journey when I'm not a new to AA customer. This is where we already have a AA handle and I've already linked my accounts. So in this case, the only thing I need to do is just log into my Account Aggregator app. I will see a consent request which I need to approve or deny, and my data will be shared. It's almost very similar to what we see right in the payments world, where we get a notification on our UPI app saying that a particular merchant is asking you to, let's say, pay 2,000 rupees. Do you want to proceed? And you say proceed, and you enter a OTP, and you're done with the transaction. That is how easy this would become using an Account Aggregator. And this is another kind of journey which can be used. Very similar. Here, the bank name has been asked to choose the bank name upfront. So account aggregator is also capable of doing auto discovery using only your mobile number, but that would actually mean, reaching out to all 26 FIPs on account aggregator and pinging them with the mobile number, looking for your account. To make that easy, now, we upfront account aggregators ask for the banks, and this could be a multi-option select. You verify, do a mobile OTP verification. Your accounts are displayed. You choose and it could be savings, current, term, and so all types of accounts from a particular bank will be displayed to you on the screen. Once you say proceed, you'll get a OTP from the bank to verify the linking request. That done, there's a consent request which flashes on the app, which you decide, you can read. If you look at this consent artifact, you will see that it says, what data will be fetched, what is the period for which it will be fetched, how many times will it be fetched. So is it one time? If is it recurring? If it is recurring, then what will be the frequency of the recurring fetch? What is the validity of this consent? So beyond 1st April to 15th April, this consent is valid, within which I can, as a FIU, fetch your data, and your data will be. So this is a processing data life, where we say that the FIU can actually not process your data beyond this data life. So as a customer, you've kind of, before giving any consent to share the data, it's not hidden in any terms and condition or a long list of consents which today the FIUs take. It is displayed to you upfront, and as a citizen, I decide whether or not I want to share my data at these terms. Once I say approve, the data flows to the FIU, and it could actually be used to give digital loans. So friends, we've seen that how account aggregator can actually be powerful, and here are some of the key enablers which we think are expected to take account aggregator to its full scale. Some part of it has to be done by the policymaker, some has to be done by the industry participant, and some has to be parallel. Policymakers is all more about broadening the FIP base and ensuring interoperability. Participants need to work on ensuring that the data governance, the whole objective behind this framework, is strengthened, and they work together to ensure that the gaps through which data can flow, or there could be misuse of data or data frauds, all that can be prevented. So we need to do a lot of work around that. And parallelly, obviously, we as a industry is working on deepening usage, saying that let's not get into something which is only available or suitable for people with a smartphone and who can do a digital journey solo. So let's also expand it to phygital assisted kind of customer segments. And obviously, there is some discussion and work which needs to be done on creating customer awareness and educating them, like we've done for other digital goods of the country. So using all this, we would think that we'll be in a good shape. And I hope you found this session interesting. If there are any questions, you can reach out to us at Sahamati. All our contact details are available on the website. And thank you for joining the session. Have a nice day.